Welcome to questions and answers series. I was asked by my friend Kotik which scale on charting to use, logarithmic or linear, and I will try to answer it in this video. So to do it, first let's get my screen on and we can start. So there is a huge difference between using those two scales. While linear, each increment will represent the same increment in value, while logarithmic one, each increment will represent the same move in percentage, meaning that on standard scale, distance between 4,000 and 8,000 will be the same as between 8,000 and 12,000. While when we use logarithmic scale, the distance between 4,000 and 8,000 will be the same as between 8,000 and 16,000. So you can see right now the Bitcoin chart, and I turned on my drawings. So I tried my best to show you how the linear scale and logarithmic differ when you're trading and charting with diagonal trend lines, which I hate with passion, but because they are not reliable in my opinion at all. And I tried to draw it like a straight line here, and you have to excuse me for my drawing skills, but if I used linear, just a simple line on TradingView, it will transform it between the scales in a different way. So I had to draw them manually. They're as close as I could do to be a straight line, and I draw them on linear scale. So they're like, let's say those are trend lines, and what switching between timeframes will do with those lines, it will transform them into a curve. So all the diagonal lines drawn on the linear chart will be like curved to the upside and flattened, and the opposite will happen when you're charting on logarithmic scale. That's why you probably can see on your Bitcoin charts with those Bitcoin maximalists, all those strange curvy lines. Those are because they're like using, at least trying to act as they are using the logarithmic chart. So how does it affect our trading? First of all, if you're trading diagonals, if you really have to, just switch to one type of the chart and don't switch between them, because they will be in totally different places and totally different shapes. And also when you want to use logarithmic scale will be best to use with the assets which are highly trending over time and are highly volatile. So to show you the difference, this is the Bitcoin chart again. If I wanted to chart, if I wanted to analyze the price situation, like between November 2013 and March 2017, it would be really hard using the linear chart. But when I switch it to logarithmic, then the increments on a chart will actually correspond to the percentage gain or loss in value. And it's easier to chart without all the magnifying and moving the chart. So I can see all the price history on one chart together, and it will be easy for me to place horizontal trend lines, key support and resistance levels, and trade of it. It will not matter if you're using less trending assets, maybe you can go to Forex, to Euro USD trading pair. And Forex charts are long-term, basically ranging. So on Euro USD, because between all-time low and all-time high, there will be like 100% price difference. So when I change the logarithmic to linear, it won't affect the chart so much as it would in, let's say, in SPY price action. So if you're trading SPY, you're trading linear, it looks scary. If you're trading logarithmic, it looks less scary. And to show you like a long term, this will correspond well. So this is logarithmic, this is linear, and it makes a difference, especially when you're using diagonals. You wouldn't care about the type of the chart which you are trading on if you were using the horizontal lines, because whenever you place a horizontal line on a chart, it will remain at the same value and it will correspond to the same value. So even if you change the scale on your chart, those horizontals may be in different places on the chart, but they will still be the same value. And you can't say about the diagonals. And also, if you're using trading tools like TradingView, which I'm using here, if you're using like a normal line as a diagonal, because of the limits of the platform, it will not transform it by the logarithm and it will totally misplace it, which means it will be totally in different place and totally not corresponding to what you are seeking for. So there are limits of it, and the rule of thumb will be, if you're trading of the logarithmic, stay with logarithmic, don't switch between them. If you're trading on linear, trade on linear, and don't use diagonals because they suck. Okay, I hope this video helped you, and see you in the next one.